Hi, Tim. Hi, Nadine. You guys doing well?
Hi guys, good to hear you. How are you doing?
I'm do
Hi, guys.
I'm doing well. I can hear you both. Thank you so much for joining us. We're on a bit early here, and Dr. Murphy just jumped in, so we're going to get him on stage here, and we'll kick things off right at the top of the hour. Super excited to have you both on. I love what you guys are doing at Particula. I've been following you guys for a while now, and super excited to get to meet you and dive into what you guys are doing today.
Yeah, likewise, likewise. And I guess you're Jackson, correct?
Yes.
Because I only see the company profile.
Yes, this is Jackson. I'm our director of business development here at Infineo.
Sounds pretty good. Yeah, pleasure to meet you, Jackson. We are also very, very happy to have the opportunity to be on and really looking forward also to learn more about Infineo, because you're active in the space where we are currently seeing not that many issuers, but a huge potential. Yeah, so it's very interesting in both directions, I guess.
100%. Very, very excited to have you guys on today and to dive in a little deeper. And with that, we've got our listeners here. First couple, thank you for joining. I'm going to get a pinned tweet up. If you have any questions, we'll have some time at the end for Q&A, so make sure and get those in. And while I get that pinned, it would be... or I'd love to introduce everyone that's listening to the space that we're having today. You guys are on our bi-weekly real-world asset tokenization space, where we at Infineo have on different companies within the real-world asset tokenization space and highlight what they're doing and dive into different topics in the space. And today we have on a company that I love and know personally, Particula. They're helping consumers navigate the token economy more safely, by providing actionable insights on tokens such as ratings. And so I'm super excited to dive in a little deeper into what that means and how it's going to continue to change the token economy. And with that, Tim and Nadine, I would love if you guys could or if you guys could give a quick introduction for our audience members and give a little background on yourselves.
Yeah, sure, Jackson. More than happy to do so. And thank you very much for having us. Nadine, would you like to start with the introduction? Ladies first.
Sure. So I'm Nadine. I'm one of the co-founders of Particula and CGO, so Chief Growth Officer, and my responsibility in the company is basically around everything growth related, so partnerships, sales, marketing, go-to-market, and therefore I'm speaking with a lot of market participants and stakeholders. More than happy to join this space today. Thank you.
Awesome. Perfect. Thank you very much, Nadine. Then I'll continue. So my name is Timm. I'm also one of the co-founders and managing director at Particula. I have a background in finance, so I started my career in investment advisory, later on switched into auditing. And before we started Particula, I was working as a consultant to advise banks and asset managers around digital asset adoption with a strong focus on financial market regulation and technical implementation. So we tokenize gold with one of the biggest banks in Germany and have built decentralized banking infrastructure with banks and asset managers as well as exchanges in Switzerland. And this was also the starting point for Particula in 2022 because we had the opportunity to speak to many institutional investors and their needs and hurdles when it comes to tokenization, especially in regard to data quality, data availability, and risk management. And more than happy to dive into those aspects today in the Twitter space.
That's incredible. Thank you guys so much for giving a little background. As mentioned at the top, I'm Jackson Blau, our Director of Business Development here at Infineo, and I'm joined by our Chief Economist, Dr. Robert Murphy. Dr. Murphy, would you give a quick introduction for our listeners here that may not be familiar with you?
Sure, yeah. So thanks, everybody, for joining. And, I'm the Chief Economist here at Infineo. And, our part of what we're doing is tokenizing life insurance as an asset class. And so we're definitely interested in RWA, all aspects of it. And we know that as this grows in popularity and becomes a bigger part of the conventional financial sector, that we need more people sort of providing guidance to investors, both institutional and retail. So I'm just looking forward to this conversation.
Incredible. And with that, now that we're through the housekeeping, I would love to dive into our first topic today, which is really setting the new standard for tokenized assets with what you guys are doing at Particula. I have never seen a chart that is as robust and dynamic in terms of classifying digital assets than what you guys have put out with your PDACS system, the Particula Digital Asset Clarification System. I'm going to get that pinned up here, but I would love if you could just kind of talk us through how you guys came up with that and how you define and classify digital assets using that system.
Yeah, so I'm more than happy to, Jackson. So when we started back in 2022 with all this kind of market research and getting a first glimpse on the topic in regard to the needs when it comes to digital assets, I guess one of the major hurdles that we are currently seeing is a lack of standardization, harmonization, and also understanding. Yeah, so one of the problems you're always facing when you're hopping on a call with somebody new is that people are trying to harmonize their understanding what is a digital asset. Yeah, then we have also new terms like RWAs, so real-world assets, where also people out, especially traditional finance, have a different understanding when you're talking about RWAs. Yeah, so from the beginning on, we wanted to clarify on our scope internally, so what should be covered by Particula in the future, and on the other hand side, provide a harmonized understanding in regard to digital asset classification. Yeah, and therefore we created, you already mentioned it, the PDACS, so a digital asset classification system, where we are differentiating in the first step between native digital assets and former analog assets. Yeah, so the first step that we are undertaking is to differentiate the asset layer. So we are looking on the underlying asset and differentiate between the fact if we are talking about an analog asset or digital asset, as well as if we are talking about a single or basket asset, to differentiate asset-backed and non-asset-backed digital assets. The next step we are looking at is the so-called method layer. Yeah, and in this regard, we are currently seeing when you have a native issued on-chain asset, you can add additional smart contract layers in order to create new assets, or you can tokenize existing or former analog assets in order to create digital representations on-chain. So after differentiating between asset and non-asset-backed tokens, as well as native and analog assets, we are diving deeper into each class. Yeah, so when we're looking at former analog assets, we are differentiating between assets that are natively issued on-chain, like on-chain funds, for instance. We are looking at tokenized assets and also payment tokens. Yeah, and in this regard, especially the differentiation between natively issued on-chain assets and tokenized assets is pretty crucial, because we are often hearing that people are saying real-world assets, also including financial assets. And in this regard, we made the separation between those two aspects. Yeah, so we are clearly differentiating between financial assets, which are covering all kind of fixed income and equity products, as well as real world assets, covering real assets like real estate, infrastructure, or land, and other asset classes like environmental assets, for instance, CO2, energy certificates, commodities, and also miscellaneous or bucket. We have named miscellaneous, for instance, for luxury goods, collectibles, so on and so forth. And on the native digital asset side of non-asset-backed tokens, we have differentiated between crypto assets, so cryptocurrencies and utility tokens, NFTs, and payment tokens that are unpacked or algorithmic packed. Yeah, so also there's a differentiation between different kind of payment tokens, so stable coins that are backed by a basket of different kind of assets or fiat currencies, and those payment tokens who are unpacked or algorithmic packed. Yeah, and the last layer after the asset layer and the method layer we are looking at is the so-called integration layer. And based on the assessment of the smart contract design and also the terms and conditions of the issuer, we there look at the product design, the legal framework, and the utilities. And when we are sticking with tokenized assets or asset-backed tokens to have a broader scope, we have differentiated especially security tokens into equity tokens, debt tokens, derivatives, also fund tokens, and other investment tokens to really narrow down the different classification and give investors a harmonized understanding and language to utilize.
Timm, that was a phenomenal breakdown. I really love what you guys have done with this chart, specifically in the method layer. And so for those of you that may not be familiar, I've pinned the chart that we're talking about, the digital asset classification system that Particula has come up with. And if you take a look really at the method layer, I'm really impressed by how you guys have approached breaking down the specifically native digital assets, the payment tokens, the non-fungible tokens, and the crypto assets, and then how you go even further in the integration layer. I'd love if we could talk a little bit more about your guys' approach specifically on the digital asset side and how you guys approached differentiating between those different types of digital assets.
Yeah, so one of the major aspects after we have differentiated between financial and real-world assets, of course, was to get a good market understanding. Yeah, so when we started back in 2022, one of the main challenges that we had was to get a good overview about what issuers are in the market, what kind of products we have in the market, and how are they structured. And initially, we have aggregated data from nearly 900 issuers and over 1,000 tokens to find similarities within the design. Yeah, and in this regard, what we have figured out, and I guess this is currently one of the major challenges, especially for investors who are entering the space, is that the same underlying asset is tokenized by different providers out of different jurisdictions with different tech stack and ownership rights, and that investors need to spend more time performing their due diligence on a token level instead of the underlying asset level. Yeah? And therefore, we did comparative analysis between the different product structurings to come up with this kind of classification system. And we also collaborated with association and industry thought leaders like the DTIF, the ITSA, which are both association working in the standardization and especially also identification space. So both of them are providing unique token identifiers. You can imagine them as ETH equivalents to uniquely identified token. And we brainstormed and harmonized our understanding about those classifications or potential classifications of digital assets to come up with the system.
That's really incredible, Tim. Dr. Murphy, did you have something to chime in there?
Yeah, so again, I would really kudos to you guys. I have been on these spaces that I'm periodically doing with Jackson, asking people about, the taxonomy of how do we use it, and just like whether we're using the vocabulary in a consistent fashion. Like some people, use crypto, and some people mean a very narrow thing, and some people kind of use that as a catch-all for anything on a blockchain. So I guess my specific question just is, would you say, am I understanding right, that of a stable coin, an algorithmic one, would you classify that as a native digital asset, but one that has, a real world asset backing that up? Would that be on your asset back side? Like, so different types of stable coins, they're both pegged to the US dollar. Could they be on different, genuses in terms of your diagram?
Yes. So this is definitely possible. And that is the whole aspect around the method layer. Yeah. So we are looking if we have an implementation where a former analog asset, like the dollar, for instance, is brought on chain natively fully backed, or, for instance, tokenized as a representation, or if we have only smart contract logic that is trying to keep the peg, for instance, based on short or long positions or other algorithmic procedures. And therefore, it can definitely be the case that stablecoins are differentiated in a different way. Yeah? So we are already seeing within our platform in regard to the coverage, because for the moment, Particula is only covering asset-backed tokens, that we are excluding payment tokens, stablecoins to be concrete, that are unpacked or algorithmic packed because they are currently not in our scope and are not working with our methodology, because we are performing our assessments in regard to the issuer, token, as well as underlying asset level. And you can imagine it's getting very complicated when you look at the space. So we are also seeing tokens who have tokens as underlying, and then the underlying tokens have also underlyings. Yeah? So we are trying to keep up with the pace of the space, also constantly enlarging the system that we have created. But to come back to your question, it can definitely be the case that we have stable coins, one on the native digital asset side and the other one on the former analog asset side, Robert.
It makes a ton of sense to me. Dr. Murphy, did you have a follow-up question there?
No, I mean, I could just keep asking you questions about this, your classification system all day, but especially in case people are, at work or driving in the car, so that we don't want to just focus on this if they can't see the chart. But yeah, I would just encourage people, even if you do it after the spaces is over, just to look up their diagram. They've really done a good job of coming up with a sensible way to try to classify everything.
Yep, and we've got that pin there. So if you're interested, you can bookmark that, save that for later. And I'm sure that we'll come back to this a bunch here. Timm, you mentioned something that I wanted to dive into a little bit deeper in terms of investors really spending more time doing due diligence on the token itself. And I feel like that's what Particula actually allows for. And so I'd love if you could talk just kind of about the role of token analytics in setting robust market standards and ensuring transparency for investors, which is what I believe you're doing at Particula.
Yeah, sure. Happy to do so, Jackson. So as I mentioned a little bit earlier, when we are looking at the current market landscape, we are seeing that different providers are bringing the same underlying asset on chain. And the PDEX is pretty well connected to the core premise that we have at Particula. And this core premise is that despite from the structure of the underlying asset, so if you have an analog asset or digital asset, a single or a basket, when you're tokenizing it or add additional smart contract, you are changing all major product features. Yeah? So you have new regulatory frameworks applicable, you have new fiscal compliance. So if you're bringing the underlying asset in a certain way into your balance sheet, into your tax declaration, it's not the same for the token because different frameworks are applicable. And of course, you also have a new operational infrastructure, which comes with unique risks. Maybe we can tackle this a little bit later. And at the same time, of course, you also have new valuation dynamics. Yeah, I'll make one quick example. When we are thinking, for instance, of the tokenization of real estate, we now have the situation when put in, or when the product design is very well, or maybe the target should be that we have no notary involved, we have atomic swaps, so we have the opportunity to trade 24/7, we have increased liquidity. Then, of course, it's pretty natural to ask if we should integrate, for instance, a liquidity bonus into the valuation of this property. Yeah? So separating the valuation dynamics for the tokenized compared to the traditional exposure to this kind of real estate. So you're changing all major product features, and therefore we are also seeing, based on the different design, the different ecosystems, and also regulatory frameworks, that there are huge differences between the different tokens that are referring to the same underlying asset. Yeah? And therefore, when we are talking to institutional investors, they already have a good understanding that tokenization is simply changing all those product features, and that they have to spend a lot of time on the token level for performing their due diligence. And one of the major challenges where Particula is helping them is to harmonize on and off-chain data. So especially when we're talking to, for instance, liquid token investors or hedge funds who already have major positions in crypto, they are all used to performing their due diligence on an on-chain level. Yeah, but they are struggling to get all the necessary off-chain data to get the holistic picture. And now they not only have to assess the token as an instrument, but they also have to assess the quality of the issuer and his respective ecosystem. So who's the tokenization provider, who's the custody provider, and what are the implications of those stakeholders and the counterparty risks? And they have to understand the quality of the underlying asset and how the underlying is connected to the token from a regulatory, but also from a technical perspective. Yeah, and this is really challenging for them. So based on our market feedback, they usually spend up to 40 hours only in regard to data aggregation. And then they are performing manual due diligence processes to get an initial glimpse or understanding of those opportunities, valuing up sometimes up to 100 hours per token. And when the outcome is, we do not want to invest, then of course you had high opportunity cost, high operational cost, and you cannot scale this kind of assessment so far. Yeah, so one of the major aspects that we are seeing is that investors need reliable data providers that are harmonizing on and off-chain data, and that not only provide an initial assessment, but also ongoing monitoring. And also the change from the traditional understanding we have in risk management of traditional financial instruments, for instance, from the big credit rating agencies who are working with many analysts and at least internally try to not update a rating more often than once a year, to a new technical-driven approach, which enables real-time risk assessment and also new use cases. For instance, value-added services for custody providers or marketplaces, exchanges, who can utilize real-time risk assessment, for instance, for automatic listing and delisting, And real-time risk assessment and analytics around those instruments are really enabling those new use cases and open up new opportunities within the space, which also enables or could potentially attract more liquidity.
I 100% agree, Tim. Dr. Murphy, would you like to chime in there?
Yeah, sure. So I think Tim and Jackson and I, especially more Jackson, like doing more research, knows the answer to this, but maybe just for the benefit of people who are just tuning in or hearing you for the first time. So, like, is it accurate to say you're like the S&P and Moody's and Fitch for digital assets, or do you actually think that's not the right analogy?
I guess it's a good analogy to get a first understanding of the value proposition of Particula. I often refer to a mix of Bloomberg and Moody's because we're aggregating all kind of on and off-chain data on all the three levels I just described, so issuer, token, and underlying. And we are creating a good understanding in regard to the technical implementation, legal and compliance aspects, transparency, technology for investors. But we are not directly competing with the Moody's and the Fitch and the S&Ps because we are more complementary to their services. Yeah. So when we look at our value proposition and also the things that we are doing, we are asset class agnostic. Yeah. So we are the expert on the token level. We are creating real-time risk return profiles of those tokens, but we are working together with other third-party providers that are assessing the quality of the underlying asset. Yeah. So if there's already a S&P, Fitch, or Moody's rating, for instance, for a money market fund on the underlying asset level, we will incorporate it. If we have a audit report or quality report around a real estate property, we will incorporate it. And just recently, we rated one tokenized diamond from a private bank here in Europe. They provided us with an independent third-party auditor report for the quality of the diamond, so we incorporated it. Yeah, so it's more complementary, but to foster understanding, you can say it in that way. That we are the S&P and Moody's for the space, but the true value proposition is with assessments on the underlying asset level and the particular assessment on the token level to give investors a holistic understanding about the risk and opportunities involved in those tokens.
Okay, yes. If I could, Jackson, let me just ask one quick follow-up again for the newcomer who's just hearing this. So can you just clarify again, like how do you guys, I think people understand you're saving them so much time that, oh yeah, if we're, I'm a fund and I'm going to invest in a bunch of different tokens, that you guys can save my team a lot of time. But so how do you actually make your money? Because the credit ratings agencies, often it's like the debt issuing firm that pays them. And so people worry about conflict of interest on that side, but then more like if I want to get a Bloomberg terminal, I'm paying a high fee to Bloomberg. So it's there more like on the consumer end. So how do you guys, especially if you want to scale, how do you thread that needle in terms of, obviously you have to make money, but you don't want to be biased to give the rating that somebody's paying for?
Yeah, definitely. So we are monetizing both sides. So the investor side and currently still the issuer side. And so on the one hand side, we are providing our analytics, like you mentioned, from the Bloomberg perspective, in a subscription-based business model for all kind of investors who want to get exposure in the space. We are also providing them with the opportunity to submit tokens to us where they want to have the risk assessment done and also the monitoring done by us. But we are at the same time also seeing that issuers are approaching us because they want a rating. They want to create more visibility. They want to attract liquidity. They want to outline their competitive advantage. And therefore, they are interested in getting those ratings, and many of them are still used to this kind of agency model. Yeah, so just recently, for instance, we have worked together with one provider. They got a Moody's rating, an S&P rating, and a Particula rating. Yeah, and of course, in this regard, we have structured it in that way that the issuer also paid for the report creation. Not the rating creation, this is important to mention, but we are also providing comprehensive reports exceeding sometimes 20, 30 pages so that they have something to show for sales, marketing, and stakeholder relation management. But this is only the initial phase of Particula and what we have planned in regard to our roadmap, because one of the major aspects for us also to enable the new use cases that I described a little bit earlier is to bring those ratings on chain on a protocol level. Yeah, so directly get with those risk assessment into the asset underwriting and charge it on a transaction base instead of monetizing the intermediaries, despite if it's an issuer or if it's an investor, to pay for the ratings. Yeah, so this is the next phase that we are currently working on.
And if you guys haven't checked out their reports, they're really so phenomenal. You guys are really diving deep into some of the most innovative products in the space. And with that, I'd actually like to talk about one of the reports that you guys recently put out. It was something that I was familiar with personally, but I didn't think many people in the space were looking at. And this is specifically talking about the report that you guys put out around BlackRock's Biddle Fund and how they are actually being used for other funds. Like how you mentioned earlier, tokens sometimes have other tokens inside of them. And so it all comes down to the underlying asset. So I would love if you could just speak a little bit about that report that you did regarding BlackRock's Biddle Fund and the findings that you were able to come up with.
Yeah, so I'm more than happy to do so. So, like I mentioned, we're seeing that, or you already outlined it, Jackson, that the Biddle Fund, or you as an investor, can get exposure to the Biddle Fund through various tokens. Yeah, so on the one hand side, we're seeing Securitize as a partner of BlackRock, transfer agent, and also technology partner. You can get exposure via them directly, but you could also get exposure via the Ondo OUSG, the Mountain Protocol's USDM, and also a smaller project based in Europe, which is called Midas. Yeah, so they recently also allocated a portion of their capital into Biddle. And this really highlights why it's important for investors to make the differentiation on the token level. In regard to Biddle and maybe completely the fixed income space, when we are currently looking at the space, we see highly interesting developments, especially in regard to the usage of fixed income tokens or Biddle, especially as a collateral. Yeah? So one of the major aspects we have focused on in especially the market developments and the assessment of the fixed income space was that the Biddle token is currently already used by some smaller, but mainly is eyeing for the usage as a collateral in major crypto exchanges, like Binance, OKX, so on and so forth. And also within working groups of the CFTC, BlackRock has proposed that DLT-based assets should be used as a collateral. So we are currently seeing a market shift and really also a leverage for adoption. Yeah? So one of the major findings on the one hand side was that you can get exposure via various tokens, where also investors need to pay a lot of attention, especially in regard to the product structuring and the token holder rights, because we are seeing product structurings, for instance, the one from Securitize, where you can get directly fund shares, so you have absolute rights in regard to the underlying, but we are also seeing product structurings where you only have so-called relative rights tokens, which means you only have a liability against the issuer. And there's a third group of tokens that we are differentiating at Particula, so absolute rights token, relative rights token, and so-called no-claim token. And with no-claim token, you do not have any kind of ownership in regard to the underlying, and you do not have any kind of liability against the issuer, so you're only holding the token. Now, when we're currently looking at the landscape of the different providers, we do not have any kind of no-claim token that gives exposure to the Biddle Fund. It's all absolute, or Securitize is an absolute rights token. The other ones are relative rights token. So you already have to pay attention in regard to the product structuring and try to understand what are the contractual terms of the issuance and what kind of counterparty risks do I have.
100%. And I'd love if you could hit on why someone would potentially invest in one token versus the other. I know that they have different minimums and things like that, but for someone listening that's just hearing that these tokens all have the same underlying asset, may then beyond the counterparty risk, what are the other factors that play into choosing one over the other?
Yeah, I guess there are various aspects that needs to be considered. On the first hand, of course, you have all kind of counterparty risks that can be involved. And one of the major aspects, of course, is the product structuring from a legal and regulatory perspective. Yeah, so within our report, for instance, we have differentiated those tokens or issuances based on the investment vehicle, if we have a bankruptcy remote SPV structure or not, what kind of regulatory body is involved, and also how regulatory compliance is incorporated. And we are currently seeing a broad range of different product structurings, preferred jurisdictions. Yeah, so when we look especially on the tokenized fixed income space. Many offerings are coming from the British Virgin Islands, Caymans, Jersey, Singapore, also some exceptions from regulation S and D in the US. Yeah, so it's already important to get a glimpse as an investor on the regulatory compliance and also understand in combination with the terms and conditions of the issuer, what kind of legal due diligence and risk exposure do I have as an investor? And some of the reasons why people are choosing certain investment products might also be the investor profile, which is able to access those products. Yeah, so we have different investor profiles who can access those different kind of products. Usually we have qualified retail and institutional investors. Sometimes we only have institutional investors. And also the investor geography plays a huge role. Yeah, so we not have the situation that all tokens can be bought from a global audience. Yeah, so mostly we have only qualified US investors or qualified non-US investors. So in the primary issuance, issuers, due to the kind of regulatory landscape and cross-border regulations, are not always enabled to provide their services globally on the first hand, and rather partner with other, for instance, ATSs or generally speaking exchanges and marketplaces to enrich the investor geography, at least in the secondary market, have this kind of opportunity to access some of the investor groups. So this is one of the criteria investors are looking at. And of course, also the stakeholders who are involved in the process, like the tokenization provider, the investment manager, and custodian. And in this regard, we are currently also seeing, and I guess this is one major development we can highlight, that more and more institutional players are entering the space, either on the custodian side, but also on the investment manager side. So for instance, one of the latest news was that Janus Henderson became sub-advisor in the Anemoy ETF fund from Centrifuge, which is also a big differentiator for potential investors who want to get exposure and see that there are experienced and big institutions involved in those issuances.
That makes a ton of sense to me. Looking at your guys' platform right now, I've been playing around with it, and I'm super impressed with all the analytics you have, from your ratings to all the details on the specific tokens themselves. And I'm really interested to hear a little more about how you see your platform continuing to evolve as tokenized real-world assets are continuing to transform DeFi. So I know right now you're focused on really fixed income, but do you see yourselves listing and rating other tokenized real-world assets?
Yes. So in general, like I mentioned, we are asset class agnostic. So we are currently working on different projects with different asset classes. We have already provided ratings for environmental assets, fixed income products, also for real estate, collectibles, tokenized diamonds, like I mentioned a little bit earlier. So the enlargement in regard to the asset classes is definitely something that we are working on. Beside the fixed income space, we are also covering equities and stable coins for the moment. And what we are aiming to do is to grow with the asset classes where we are always seeing the most traction in the market. We have created a potential adoption curve, where we're seeing that on the one hand side, the first product market fit were stable coins. We are currently in a phase where we see more and more market adoption for tokenized funds and bonds. And the next asset classes that we are seeing down the road are, on the one hand side, commodities, with more and more also institutional or institutions who are creating high quality offerings, like HSBC in the APAC region with their retail offering for tokenized gold. And the next one, I guess I'm pretty bullish for 2025 in this regard, is private debt, tokenized private debt, because we are seeing that, especially through the entering of major institutions like BlackRock, Franklin Templeton, also Wisdom Tree in the tokenized fixed income space, startups have a hard time to acquire significant assets under management, but especially the crypto investors still have a high risk appetite. So my prediction would be for 2025 that some, maybe many, of those startup providers are moving along the adoption and also the risk curve, providing more offerings in the private debt space. And after that, we are seeing real assets. I guess in regard to real assets, especially real estate, we need to have more regulatory clarity around those offerings to really enhance the investment landscape and also create additional utilities for the user. And last but not least, equities. I guess equities will be the hardest asset class to achieve, despite if we are speaking about public or private equity, because on the one hand side, public equity, we have very, very sophisticated structure in traditional markets. Many people who are earning their fair share in the current settlement infrastructure and generally speaking infrastructure. And at the same time, in regard to private equity, the data quality availability is not really given. And also the structure of the underlying, when you're only assessing the value of an underlying asset, maybe once a year, once half a year, so on and so forth, it's pretty challenging to incorporate real-time pricing, so on and so forth. So from our perspective, and this is how we are planning to enlarge the covered asset classes in regard to our analytics, we have started with tokenized funds, bonds, stable coins, and the next asset classes are commodities, private debt, and then real assets and equities.
That sounds like a really good roadmap to me, and it sounds like you guys are right on the money there. I'm curious if you expect any difficulties with providing ratings on tokenized real-world assets, specifically like real estate, where it's an industry that's known for having siloed data, and providing ratings is really done based on having good data inputs. And so how do you see the future of tokenized real-world assets and providing ratings on industries where the data may not potentially be as available?
Yes. So currently we are trying to tackle this problem with a multi-layer input approach. So on the one hand side, we're aggregating data out of public sources, on-chain as well as off-chain. So for instance, we are constantly monitoring the websites as well as the terms and conditions, white papers of issuers. We're looking at public available market reports and third-party sources that we can utilize for data aggregation. And at the same time, we are also working together with the issuer to provide additional data points. So issuer have the opportunity to log into our platform, provide additional data with an independent third-party verification source so that we can verify the information and then check it. The off-chain data integration, of course, is very, very challenging. It's still a manual process. You have many unstructured data sources. You already mentioned data silos, but there are also different players trying to tackle this kind of problem. Only to mention one, Invinium, maybe somebody wants to check it out or already knows them. They are trying to commoditize, so to say, the data that is especially involved in private markets or real assets to get a better accessibility. But one of the major aspects that I'm also waiting for are more and more oracles to implement underlying asset data also directly on chain. I guess this will be a key aspect for the future, that we are bringing those data points on chain to have them available and provide our assessments in real time. Currently, of course, we have to do some workarounds, we have to do some manual work, but this is all due to infrastructure that needs to be built, and also a harmonization of the infrastructure and the underlying asset structure, because we're currently seeing we are aiming to build a high efficient, high quality infrastructure, high speed atomic swaps, instant settlement, and the data is simply not matching this kind of characteristics. And therefore, I guess we need more and more players who are bringing data on chain and commoditize those data points so that service providers like Particula can access those data points. Good example, once again, is also the proof of reserve on Chainlink. So to verify that actually the asset is backed by a certain amount of underlying asset to really make it visible and accessible for providers like Particula.
So, but yeah, if I could just jump in here, Jackson. So that's something that is really intriguing to me. And would you say, Timm, that it's kind of a chicken and egg problem, but that as you go ahead and then provide guidance and peace of mind to potential investors for those things where they are very transparent, that will put pressure on the more obscure offerings, that they're going to realize, if we want to get more adoption of what we're offering, we have to make the data more available, because these outside ratings agencies, for lack of a better term, need to have something to work with that they can trust to pass on to their customers.
Yeah, I definitely think so. So From my perspective, we are making very good progress and very good steps in regard of the understanding from an issuer perspective that on the one hand side, we need high quality offerings to attract liquidity. And on the other hand side, that transparency is enhancing adoption. So one of the major challenges that I'm seeing also for more transparency and data availability is regulatory unclarity or maybe also compliance aspects, where especially in the US or the Asian region, it's not possible for many issuances to launch on public chains. So we are seeing many private or permission chain issuances instead of public chains. In Europe, actually, it's a little bit different. So also big institutions are engaging in issuances on public chains. And then, of course, we have a whole different transparency and also opportunities for investors and service providers like Particula. And I guess increasing the adoption, the transparency, and also the quality of assets will attract more investors. And the more investors are attracted, the more there's also the need for the services that providers like Particula are providing. And I guess from a chicken and egg perspective, based on the recent market developments, we have already seen that the issuance of the Biddle Fund from BlackRock in March already had a big impact, attracting the first investors, which might be more crypto native than traditional. But people are working on high quality offerings, and I guess it will help to foster access, foster liquidity inflow, and then as a next step, also the need for investors to pay more attention on due diligence, on continuous monitoring due to more liquidity in secondary markets. And then also providers will open up more information because investors will demand it and also want to understand how rating agencies or other providers are making their assessment and based on which data.
That makes complete sense to me. And you put that so well, Timm. I mean, it really is a problem that the industry is dealing with, but you guys are dealing with it perfectly right now, going to really the issuer level, working with third parties to get verified, trusted data, and using the technology that the industry comes up with, like you mentioned, with Invenium and Chainlink. It's funny you mentioned Invenium. Invenium was one of the companies that brought me into the tokenized RWA industry a couple of years back. So shout out to Pat and those guys over at Invenium. I would love if we could talk a little bit about how you guys are leveraging AI to monitor token behavior and flag risks and potentially predict market trends.
Yeah, I'm more than happy to do so, Jackson. So maybe we can do one or two use cases to make it as tangible as possible. So one of the major things that we are doing is constantly monitoring, for instance, the terms and conditions of the issuer. And the reason for this is that based on the terms and conditions and also in addition to the smart contract, we can get a really good understanding about the product structuring, the ownership rights, and also potential risks important for investors. And what we are currently seeing in the space as it's so rapidly evolving is that terms and conditions are actually changing overnight. And this could be due to the fact that maybe the issuer acquired a new license, they had to restructure the product, maybe they enhanced it by functionalities or released a new version of the token, changing the terms and conditions. And this, of course, has a huge impact on the risk profile of a certain token. And therefore, we are constantly monitoring it, scraping the data, and we have, and this is one of the major aspects in regard to our risk assessment, the risk assessment that we are providing is programmatic. So every time we have a qualitative information as an input, we are trying to translate it into a quantitative metric or bringing it into a structure where we can have a 0 or 1 or yes or no answer. And in regard to the terms and conditions, for instance, we are outlining the rights and obligation and also the change in termination conditions for the investor, also giving them indications about the regulatory classification. We are scanning and scraping the terms and conditions. We have predefined questions where we are currently having 3 different models that are competing against each other, learning from each other, and answering the question based on all the assessments that we are doing. And the outcome is in a yes or no scheme where we are answering, for instance, the rights and obligation in regard to change in termination condition, for modification clauses, or maybe also the fees that are involved in the issuance, and outline this for investors. And the benefit for them, of course, they have always access to up-to-date information in regard to the terms of the issuance. And for us, we are not in the need to have 5, 6, 7 analysts who are day by day going through the terms and conditions and look if something has changed. Yeah, so this is one example where we are leveraging ML to have a tech-driven approach compared to the traditional agency business model. And one of the other things that we are, or where we are utilizing AI ML, is especially in regard to transaction analysis. Yeah, so as the space is evolving, and we made good progress this year due to the fact that we saw more and more transaction and also liquidity, mainly driven through the fixed income space, we are now able to, on the one hand side, backtest our strategies, and on the other hand side, to utilize AI ML, for instance, for anomaly detection. Yeah, so we are constantly monitoring the transactions that are happening and also the wallets that are interacting with each other. And one of the major aspects we're looking when we're looking at anomalies are, for instance, mints and burns, if they are in an unusual pattern, if wallets are interacting with each other in an unusual way. Yeah, so if we have wallets that are interacting on a regular basis, or maybe we have transactions in the same amount that are happening very fast, or in the same time frame, so to say. So those are little aspects where we are utilizing and leveraging it, for instance, to create instant alerts, notifications, also red flags. And of course, it's always feeding our model for predictive analysis for the future. Yeah, so every time we are currently doing an assessment, every time we are looking at the transactions, at the terms, at the smart contract, we are always learning and enhancing our models. And this goes also for the continuous monitoring of the smart contract functionalities. Yeah, so when you're talking to especially traditional finance people, they cannot believe that functionalities in the smart contract are changing overnight. Yeah, and then you have new entities and wallets who are able to access the assets under management. Yeah, but this is definitely in the case in the space that we are currently working on, and things that we are monitoring, where we are training our intelligence to reduce the manual amount of work that we are doing and create new functionalities for value-added services.
That's really phenomenal. We integrate AI with pretty much everything we do at Infineo. It's an integral part of our ledger technology, and also our Dr. AI Bob, who is going to be a 24/7 life insurance agent that will be able to give you insights on your policy. Do you see it? You got yourselves building any sort of similar chatbot type features where you'll be able to ask questions about particular assets, or are you more focused on using the AI on the back end to essentially remove the manual data scraping?
Yeah, so a chatbot is definitely on our roadmap. And currently we're working, I guess it's more a topic for 2025, because one of the major aspects that we are currently working on is the automated creation of our reports. Yeah, so you can imagine when we are writing a 30+ page report, it still takes manual input, and we are aiming to standardize those reports as much as possible, even if it's hard due to the highly individualized product structurings, issuer situations, so on and so forth. But this is one also of the major applications that we are looking in to provide investors with constant up-to-date data and reports so that they can make timely decisions. And one simple example would be always up-to-date market data, holder data, transaction data, mint and burn data directly in the report. And I guess this is also the value add we want to provide for investors so that they can decide right away if they want to invest in an asset or not. Because you can imagine when we were starting writing the first reports, when you're getting back to the reports, maybe 4 weeks later, 8 weeks later, they are already outdated. And this is what we are currently working on. But a chatbot would be definitely helpful, especially navigating the platform and trying to find similarities and also differences between different token offerings. So being able as an investor, for instance, or potential investor, to ask a chatbot what kind of regulatory classification, for instance, a certain provider has compared to other providers, what are the unique features, if they have integrated business continuity and risk management practices, for instance. This is definitely a value add that we are working towards too.
That's incredible. Dr. Murphy, would you like to chime in there?
Sure. Just I don't know how much you're in the weeds, Tim, with the actual implementation, but it's funny that some of the hurdles we've hit on our end in terms of using AI to outsource things and enhance our productivity. Some of the hurdles were popping up in places I wasn't expecting. Like, so for example, we had what we call the policy ledger, where users can upload a PDF of, like the latest illustration for their life insurance policy. And then we have the AI just scan that in and, get scrape it for the relevant information to put into our database about that policy. And so the different carriers have different, formats that they might use and things. So we had a bunch of training data and, we went through and did all that. But one of the things that was happening is, like, if the AI was scanning in 121 years of possible, future cash values for a policy, it would do like the first 30 and then stop and say, okay, well, that's the pattern. You can take it from here. So then it's just fun. And we realized why that was happening, because that's like the way the LLMs were trained. And a lot of times online, when someone's giving an example of how to solve a problem as a human author, they would, show you the pattern and then say, okay, you can, we leave the rest as an exercise for the reader. But anyway, it was just kind of funny that, I had this idea that, it's like a robot, and once we teach it what we want it to do, then it's just going to go do it because it doesn't need to sleep. And yet it still was stopping and saying, like, okay, well, I did enough of it. Now you guys can take it. Anyway, I'm just saying there was funny little things like that I wasn't expecting going into it.
Definitely. I can totally relate to that. Yeah, we made the same experience. And I also had the hope that it's such kind of robot which is automating everything and my life is getting easier right away. But also one of the major challenges, and it pretty relates to the police you just mentioned, one of the challenges also coming back to the underlying asset data is that when we are working together or aiming to work together with traditional data providers for underlying asset data, like, for instance, Refinitiv, usually they have contracts with a minimum amount of underlying assets or a minimum fee they would like to have for their clients. And due to the fact that there are not that many high-quality issuance out there that we want to monitor, that investors want to see from us, usually we are not able to take this hurdle. And therefore, we have created scrappers to get, for instance, information. Many tokenized fixed income products have a iShares ETF as an underlying. So scrapping or getting every week, maybe every day, a little bit depending, all the portfolio holdings of the ETF to incorporate them on an underlying asset level is sometimes really challenging. So when you have implemented, at least for one page, for one structure of a certain type of PDF, then it goes well for a certain amount of time. Then you have a little bit of model drifting. You have to get it back. Then you have other different kind of sources where you have different structuring of the PDF. It's not working. So like I mentioned, I can totally relate to that experience. And it's not that easy to implement right away. But if implemented in the right way, of course, it's a huge leverage. And I guess you can also share this experience based on your implementation at infineo.
Oh, yeah, definitely. It does so much more than, if you had asked me 3 or 4 years ago, what do you think the large language models will be capable of in the near future? There's no way I would have thought they'd be where they are. It's just, like I say, it was just surprising to me, given how good they are, and that you can have like a philosophical conversation with it. And then, you think, okay, so then once we teach it how to read these PDFs, we can just go have it, crank it out. And then in some sense, it's like it was more human than we want it to be, because the human employee after a while might say, this is boring. I don't want to keep doing this.
Definitely.
100%. And I love that. And I love everything you guys are doing with AI over at Particula. And I see how it's really enhancing the user experience. So kudos to you guys. As we're coming up on time here, I'd love to hit on one last topic that had kind of been a little bit of a common theme throughout our conversation today, which has been lack of regulatory clarity, specifically in the US. And I'm curious if you see your Particula digital asset classification system as a way to potentially help policymakers streamline compliance efforts across jurisdictions and potentially monitor the important regulatory changes for the consumers.
Yeah, I guess regulatory clarity and especially the implications of cross-border regulations are really, really challenging and one of the major hurdles that we are currently seeing. So on the one hand side, the regulator is getting more and more engaged in the topic of digital assets. On the other hand side, there are more questions than answers. And this not only comes to maybe classification schemes where we are already seeing good solutions, but on the other hand side, I can make two examples that really outline the challenges that we are currently having, which was also impacting our business model. So one of the major differentiations here in Europe, for instance, if a token is classified under MiCA, so the Markets and Crypto Asset Regulation, or MiFID, so traditional securities. And due to the fact that we have those kind of European regulation frameworks, we have currently the situation that every national authority has different kind of classification frameworks to classify if a token is a security or not. So you have 27 different classification frameworks to really decide if we're talking about a security or not. And this has huge implication on business and service providers in the digital asset space. So for instance, if you want to perform credit ratings on a security, then of course you need the respective license. And when you do not want to acquire those licenses due to the fact that, for instance, based on Dodd-Frank or ESMA guidelines, you cannot automate the whole process because you need a human review component within the process, then you have to monitor all tokens that you have in your analytics platform every day, if they are changing, if the classification on those 27 NCAs, national authorities, are changing. And then, for instance, when France is saying, hey, it's a security, Germany is saying, no, it's not a security, then you can offer your service in Germany when you do not have the respective license, but not in France because you need the license there. So this is really challenging because the implications of different classification frameworks are huge on service providers. And on the other hand side, we are currently seeing that all major institutions are trying to get the best out of different regulatory frameworks and are working with international teams. So few people sitting in the US, a few in Europe, a few in Asia, they are creating different kind of issuances within the regulatory frameworks that are more suitable for the kind of the issuance they have planned. And we are often also seeing that, for instance, the issuance takes place in Europe, the ATS is sitting in the US, other providers, custody providers or tokenization providers are sitting in Asia. So you have such complexity within those different issuances that it's really hard to keep track. And this is also something which hinders the adoption of institutional or traditional investors, that they are simply not aware or do not have the necessary clarity about different regulatory frameworks, how they are impacting each other and how everything come together. And in this regard, of course, the digital asset classification system can be an orientation, and we're talking to some regulators trying to understand their pain points, see where we can help. But there are also other topics. Earlier, I mentioned the TTIF or the ITSA, who are working on unique token identifiers, for instance, for financial disclosure or financial reporting. We are currently also discussing with various initiatives, associations, also the structuring of metadata to attach to those identifiers. So there are so many answers or questions that we're currently trying to answer that I could not say that we can solve those problems of the regulators or the market participants right away. But I have the feeling that compared to the fragmented structure we have in legacy markets when it comes to at least standardization on a identifier level or maybe regulatory compliance level, that we are working at least towards maybe not global understanding and global frameworks, but frameworks that are at least designed in that way to foster institutional engagement of different stakeholders and also different stakeholders or international involvement of stakeholders in one issuance. But this is only my personal opinion. This can change over time and is also a little bit dependent on the jurisdiction, as we are also seeing jurisdictions like Switzerland who are creating own standards, who want to be mostly engaged in their own ecosystems, who are not generally, but some of them not open to open up to standards out of different regulations. So it's still evolving and interested to see where we are heading to.
I 100% agree, Tim, and that was a great overview. I really appreciate that. And I really appreciate all the insights you've given us throughout our hour here together. It's been really incredible to learn more about you and what you're doing at Particula and how we can navigate the token economy safely with your guys' ratings and analytics. As we're coming up on time here, if the listeners would like to stay in touch with you or just get in contact with you, what would be the best way to do so?
Yeah, so on the one hand side, of course, they can reach out via Twitter or LinkedIn over our company profile. They could also shoot over a Telegram at Reinsdorf, so Treinsdorf, or they could reach me directly over LinkedIn. I guess also Nadine is reachable over LinkedIn if they have any kind of open questions or want to schedule a follow-up to get some deeper insights. Happy to discuss and happy to do so.
Well, this has been a phenomenal space. Thank you so much, Nadine and Timm, for being here and sharing what you guys are doing at Particula and how it's helping to shape a safer token economy. This has been our bi-weekly real-world asset space at Infineo. As mentioned in the bi-weekly part, we have these every other Tuesday at 12 p.m. Eastern. If you'd like to stay in contact and stay up to date with these, hit the follow button or subscribe to our newsletter. You can do that by going to infineo.ai/#newsletter. Again, that's infineo.ai/#newsletter. Thank you so much again, Timm and Nadine and Dr. Murphy, for your participation, as well as our listeners for being here. And I hope to see you guys all again on the following Tuesday. See you guys then.
Thank you.
Very much.